I must tell you that we're putting our red flags out. We do expect some trouble. So we are getting out of debt and we are accumulating cash. So I had a colleague of mine call me this morning, and his business is slowing down. We see that in the Wells Fargo quarterly that they sent out last week, saying that the fourth quarter of 2017 was the worst quarter they've had for mortgage origination since 2011. Maybe it was 2009. It's just been a really bad time. So the mortgage origination has really slowed down. We've only gone up about half a point in interest rates. So if we get some considerably bigger ones, why, of course, that's going to be really interesting. So here's where we're at with this. We need to start thinking that what if business slows down? We see that ECRI, their models are showing that we have a slowdown. They said we're as good as it gets, and it's down from here. How far it goes down, nobody really knows. Same thing with Martin Armstrong. Martin has said that we're down till July of this year. We're going to get a little bit of pop. Then we're down for till 2020. So maybe 24 to 30 months of much slower growth, so if not even declining growth. So one has to wonder how that's going to affect the stock market. You know, you have higher interest rates, and you have the central banks around the world saying we're no longer going to support the stock market, and we're not going to support the bond market. So you have twin bubbles in both the stock and bond markets. So if a prudent person would start thinking of taking some of the money out of that, and then one has to think beyond that, what am I going to do with this money? Well, let me tell you what to do with that money. Is that I think that you're going to see significantly higher housing prices 5, 6, 7 years from now. They're probably going to go down in the meantime, but you're probably going to be concerned with income. So let's take some of that money out of the stock market and get it into some income-producing real estate in very, very conservative states. Florida's good. Texas certainly good. Arizona, Maricopa County is just absolutely probably the best in the United States. So you could consider that. We have droves of people coming out of California because California, of course, is going to be adversely affected by the economy, and a lot of people are voting with their feet. So we have a huge influx of population coming here. Now let me slow down, but we're certainly doing that. So let's say if business is starting to slow down and you need income, we can get, $1 million is going to give you a lot of income here. You get $60,000 worth of pure income. We're talking about after everybody gets paid that you can get that. So that's better than you're going to get in S&P. I mean, $1 million in the S&P income is only going to give you about 1.78%. So you maybe get $18,000, $19,000 from $1 million in the S&P income that you can spend in dividends. And the 10-year, or I'm sorry, the 2-year is actually higher than the S&P. So that's a really bad sign. So I would say to you, prudently, I've had my colleagues call me, and we're talking about how to start preparing for the next 24 to 30 months. So let's look at the twin bubbles of both stock and bond markets. See if you can't start coming out of there. Here's the thing. A day early is better than a day late. So let's start thinking of taking some of that out and getting into some conservative investments that are going to cash flow for you, because you're going to want that cash flow. And let's get it out so that this will mitigate any downturn that you have. Also, I'd like to see you get out of debt. And this is for whether you have $1 million or $2 million, or you only have $10,000. Let's get out of debt, and start putting some money. Quit spending. How about that one? How about quit spending? Quit going to Starbucks. Quit buying lunch. How about brown bagging? You can save $500 a month, $1,000 a month, just cutting down on your expenses. And you're going to need that. So I'd like to see you get a minimum of 6 months cash liquidity into savings accounts and checking accounts that you can use to pay your bills. And then I'd like to see you have another 3 or 4 months of cash. $1 bills, $5 bills, $10 bills, put around somewhere that you can get your hands on that nobody else knows where it's at. So listen, we're here. I'm going to put my email on at the very bottom of this video, so that you're welcome to call me. We'll be more than happy to brainstorm if you have some problems, some questions. I understand. We're here to help. This is what we do. So God bless you. Bye-bye now.